Who hasn't heard of Warren Buffett? One of the world's richest people, consistently ranking high on the Forbes list of billionaires. His net worth was listed at $100 billion as of June 2022. Buffett is known as both a savvy businessman and a generous philanthropist. He is probably best known for being one of the world's most successful investors. This is why it's not surprising that Warren Buffett's investment strategy has reached mythical proportions. Buffett follows several important tenets and an investment philosophy that is widely followed around the globe. Do you want to know how to invest like the value investing legend Warren Buffett? All you need is money to invest and a little patience to watch this video to the very end. When a person with money meets a person with experience, the one with experience ends up with the money, and the one with money leaves with experience. Experience is the ultimate key to being a successful investor. However, what about those who are new to investing? What if you don't have any experience? Well, fortunately, you can learn from investors who do have experience. Investors like Warren Buffett himself. Some of the factors Buffett considers are company performance, company debt, and profit margins. Other considerations for value investors like Buffett include whether companies are public, how reliant they are on commodities, and how cheap they are. Take a look at these proven investment tips from Warren Buffett. Invest in yourself first. Investment planning should be done by considering the long-term goals. Investor goes for future and options with the hope of making quick money, but they are the ones who lose more money. Warren Buffett says that the best investment one can make is in his or her items. Most people are not going to make most of their money from the stock market. They're going to make it in their careers. So put yourself first. Buffett's partner Charlie Munger had a similar thought. Munger's secret to success: sell yourself an hour each day and use that hour to make yourself better. Investing in yourself is paramount to doing great things and applies to more than just investing. According to Paid Surveys USA, 75% of Americans invest in themselves first. Trust yourself to be a successful investor. Buffett says that the hardest thing is to trust your investment decisions. You always think that others are right and you are wrong. Instead, you need to study and believe in yourself. To be successful, you need to overcome the fear and not pay attention to what others are telling you. Accumulate knowledge and make investment decisions on your own to stand separate from the crowd and be the winner. Many good investors stress the importance of diversification, but Warren Buffett tends to disagree with the idea. Buffett says that diversification is for people who don't know much about investing. An experienced investor should choose stocks on a long-term basis and should have faith in his or her investments. Some investors diversify their portfolios because they are afraid that any one stock might sink their entire portfolio. But while doing so, it becomes much harder to keep track of the current events impacting each company. So by diversifying, they might reduce the volatility of their portfolio, but at the same time, they reduce their focus on individual investments. Buffett waits for opportunities to buy good stocks, and when those opportunities come his way, he takes full advantage. Make sure you choose the right news to focus on. One of the best investment tips from Warren Buffett is to not put too much stock, no pun intended, into everything that you see. Buffett believes in the 99-to-1 rule. Most investors take action based on 1% of the financial news they consume. Doing so, they quickly sell their stocks whenever bad news comes up. For example, a company's revenue has fallen by 10%. If the company in this particular example has been in business for, let's say, 100 years, then Buffett says that it's withstanding such events. In other words, people often tend to overreact. Make investments that you understand. Warren Buffett says that many people think quite a bit before making any investment, and sometimes think too much. Buffett cautions that you should never invest in businesses that you don't fully understand. He says that before he invests in the stock of a company, he has to first understand how the company makes money and the main drivers that impact its industry in no more than 10 minutes. If he's not able to understand it in 10 minutes, he moves on to evaluate another company on this basis. Most people can't predict the next fashion trend among teenagers or whether or not Divine will be successful in the market, even if it was more than possible to predict the future with 100% accuracy. In situations that rely on an accurate forecast of the future, Buffett advises not to invest. If it's complex for you, just look for other businesses to invest in. Buffett once said that out of 10,000 plus publicly traded firms, he would like to invest in only a few hundred companies before even taking valuation into account. Buying a stock of a company is buying a part of a business. Imagine you're buying an ownership stake in the convenience store around the corner from your house. Automatically, you'll think about the competition, suppliers, prices, etc. You'll have to think both about the specific location as well as its competitive position in the market. Similarly, while buying stocks, you need to think about all these things, just as the people running the business do. When you buy a stock, you're not just buying a piece of paper or a ticker symbol. Buying a stock of the company is buying an ownership stake in a business. Learn from your mistakes and move on. You might be astonished to know that even Warren Buffett makes mistakes, big ones too, but he makes sure that he learns from his mistakes. Buffett advises keeping a record of the mistakes you've made so that you know what went wrong and make sure you don't repeat them. Buffett further says that you should share these lessons with your children and grandchildren so that they know what mistakes not to commit. Don't be a day trader. According to Buffett, the secret to getting a better return on investment is to buy a stock and forget about it. He believes in the buy and hold mentality and insists on holding stocks for decades. There are two principles behind this. If you buy a stock for less than its true worth, the stock price will eventually converge with its intrinsic value. If you buy a wonderful business, the value of that business will compound and increase exponentially the longer you hold on to it. So the patient investor will ultimately be rewarded if they hold on to their stocks for a longer time. For Buffett, time is the friend of a wonderful business industry. He says that if you constantly buy and sell stocks, it'll take away a significant percentage of your returns in the form of trading commissions and taxes. So it's better to buy great stocks and hold them for a long time. I hope you enjoyed these investment tips from Warren Buffett, which can be followed by almost anyone to be a successful investor. You can take these investment tips and apply them to your own investing, whether you're a new investor or an experienced investor. For people who are still completely lost, Buffett says they should either invest in index funds or rely on other experienced investors. Make sure you subscribe and give this video a thumbs up.